Morning, Market Chameleons. Thanks for joining us today, Thursday, for our pre-market show. Morning, Dima.
Good morning, Will. Good morning, everyone. How are you?
Great, great. For those first-time viewers on the YouTube Live, please put your questions in the chat. We've got a lot of chameleons who are already active in the chat, D. A lot of questions about UVXY this morning. I don't know if it's something we want to look at. If it's your first time, please thumbs up, and even if it's not your first time, a thumbs up is always nice. And if you're here for the first time, remember to subscribe to the YouTube channel. You'll get alerted to all new videos that the man to the right of me, Dimitri, puts out. They are super helpful. With that, D, what are you seeing this morning?
Well, let's just do the disclaimer really quick. Will, everyone keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for. They should be able to help answer your questions, provide you with guidance. With that, let's get started.
Awesome.
So I'm going to share my screen real quick. And I know we got like a bunch of earnings coming out today. And this is so these are stocks that are moving into pre-market hours before the market opens. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm seeing a bunch of them today that have been reporting earnings. So the first thing I want to do is let's screen out stocks in the higher market cap stocks, see what's going on there. I'm going to use this filter. These are stocks that the market cap is $20 billion or higher. And the first one up here is Pinterest, PINS. That's up 32.5% in pre-market hours. That just reported earnings. And I know, Will, that's the one I saw questions on in the morning.
Cool.
Pinterest. So maybe we'll take a look at Pinterest. RAN up 7.6%. Twitter, that's up 6.4%. So that's going up, in sympathy with those stocks. And if you guys, I think in our on the Monday webinar, Felix Frey was here. That's what he was saying. He's getting into the Snap, Pinterest, those types of stocks. So I think he was talking about these stocks and with a lot of upside potential. So that was a good look. But let's take a look at Pinterest real quick. PINS. So here we go. Closed at $49.25, up 32.8% in the pre-market hours, trading at $65.40. The pre-market VWAP, $65.06. So we're right around there. This is the range in the pre-market, $60.22, $66.45 on 1.8 million shares. Of course, this is moving on the news. I'm going to take a look at its earnings history, and it doesn't have that much, so it's probably relatively new. I didn't exist there for that long. I got it up to 2019, so not a long history, but we could see here that in the morning they got some big gap moves historically. So on average, if we take the average move up or down, 19.5% up or down today, 31%. So big move to the upside. Here we see following the opening, this is what it did historically. From the open to the high, the average move was 6.2%. From the open to the low, average move was 3.5%. So a little bit skewed, more biased to the upside. And of course, we don't have a big data sample here, but it tended to drift higher more often than lower. 83% of the time it was higher, 17% of the time it was lower, for an average gain of 1.8%. And I think Snap did something similar, right, in the morning, Will? You there?
Yes, it did. And actually, we have people asking if anyone's in on the Snap trade. That was something brought up in an unusual option volume, I think, last week, and by Felix Frey was also talking about Snap on Monday's webinar.
Yeah, he was mentioning some of these stocks. So what I think we'll do is I'm going to go back to Snap, and I know they made a monster move in the morning. Let's take a look what happened afterwards. Did it follow through? Did it continue up? Did it sell off? So that's going to be an interesting to see if Pinterest might do something similar to it, because obviously in that morning gap, you know, that's what it's, and I think Twitter today, I think they changed their time from before market open to after market close. They're going to report because of what's going on, but they should be reporting as well. And I was just taking a look really quickly on the similar stocks. So here's Pinterest, and let's see what's moving in the pre-market hours here. So here's Pinterest up 32%, Twitter up 6.4%. You know, Facebook's up. Of course, a lot of stocks were down yesterday, so they're popping back up a little bit. But here's Pinterest up in the 6-month period, up 147%. I think Snap was in here somewhere as well. Let's take a look. Let me just sort it by the 6-month returns. So here's Snap up 161%. So very similar, but take a look at their market cap. I think, where was it? Over here, Pinterest, 29 billion. Where was the Snap? 64 billion. So compared to like Twitter, which I always imagine Twitter as being a much larger audience than maybe I'm wrong, but I always thought Twitter.
No, I think you're right. I think it is a larger audience. It's going to be interesting to see what happens to Twitter if Joe Biden wins the election, because you know there's a really high amount of Twitter users who are actually focused on the president now and what happens to that part of the community. I can't imagine Joe Biden's going to be as chatty on Twitter as President Trump was.
Yeah, look, I think at one point I heard like a lot of the traffic was just the Twitter from Donald Trump's tweets. People are following him, so we'll see. But I think that they do have like a much larger audience of 38 billion right now. You know, compared to what's going on here on a relative basis, maybe this. As far as like number of subscribers, maybe this is starting to look like a good deal here. But here you go. Twitter is also up 61% in 1 year period, up 68% in a 6-month period. We'll see what they do, coming out. But let's take a look at the fundamentals. I'm just curious here. So here's Pinterest, price to sales. So they're trading 22 times its revenue. That's compared to this entire group of 3.85. Twitter here, 11.49. So on a valuation basis, this looks like a better deal. Here we got the price to book. Pinterest, $15.51. That's before today's, announcement. These numbers haven't updated to today's report. But here, Twitter, 5 times book value. Here's the median of that group, 3.7.4%. Base gross margins, Pinterest 68%. Twitter, Twitter's coming out 64.9%. So kind of close, Pinterest a little bit better. The median 55.9%. So they have this group has big margins because it's all technology, right? There's no like they're not storing any goods. It's almost like a software company.
Yeah, I mean, you look at the PE ratios though, and they're so hard.
It's all growth, right? This is what they're just looking at revenue. So here's revenue growth, 29% in Pinterest. 5-year average is 19.8% in Twitter. Net income, they don't have any yet here. So pretty interesting. We'll see what happens today. Today in Twitter, but we're seeing how these stocks are reacting, and I think it's similar space, right? Snap, Pinterest, Twitter, social media. Before we get to Twitter, let's take a look at, if there's no specific questions on the pre-market, let's just take a look at what Snap did, because Pinterest, they're gonna open up higher, just like Snap. Maybe take a look like what Snap did after the opening. So if you don't have any specific questions on the pre-market, I'm going to move on.
Yeah, move.
All right. So here's Snap. And let me refresh my screen here real quick. So let's take a look at Snap, what it recently did. I'm going to go here to the earnings stock patterns. And we see here it's already at a almost 52-week high here. So this is Snap October 20th after the market closed. Reported earnings gapped up 23% the next day in the morning. From the opening gap to the close, it gained another 4.4%. So we see closed that day higher, 28.3%. From the open to the low that day went up 11.2%. From the open to the high of the day increased by 11.2%. From the open to the low decreased 1.3%. So very skewed towards the upside. Here's what it did the next day, up 6.8% on a 2-day. This is after earnings. 2 days after earnings, it was up 18.3%. And that's where we are here 1 week later, about up 17.4%. So we see gapped up and added to the gains on the day, and then added to the gains coming out of earnings. Looks like more money's flowing into it. Now trading near its 52-week high. Take a look. I don't know the differences between Pinterest and Snap. I'll leave that up to you to figure out and read their reports and what's going on. This is just a price action analysis. What traders did.
Well, I can tell you something about them. You want my opinion?
Sure.
I don't know either of them. So I'm like the 1% that isn't on Snap or Pinterest. From what I read, though, Pinterest is very much a community of people who share, whether it's home goods or cars or tiny homes. There's sharing of things you want to look at that people of like mind share. Like we're chameleons, we're sharing our options ideas. On Pinterest, they share pictures of things they're interested in. Where Snap seems very much focused on the younger, I'm saying under 25-year-olds, but I could be wrong.
Look, I mean, the Snap, I've never used the Snap. My wife used the Snap. She didn't want our kids actually even downloading it. I've never used it before, but Pinterest, I started using it recently because, we got a house. We're doing like
renovation
and stuff like that. Yes. And ideas like for backyards. So I kind of went on there and it's pretty interesting. Gives you idea. It's all visual. It's basically all picture based.
Yep.
And they'll throw out like cool ideas and they'll figure out just from your search what you like and they'll start suggesting. So it's kind of it's probably close to Instagram. I don't use Instagram, but when Mark Zuckerberg bought Instagram for $1 billion, everybody was like, whoa, he overpaid. That was like, why did he do that? Now it seems like he got a steal, right? You're looking at the valuations today. But Pinterest, I think it's kind of a pretty cool app. Anyway, let's take a look at, if there's no other questions on here, maybe I'll take a look at what's coming out for earnings, after the market close or tomorrow, because we got a bunch of them coming up.
Yeah, sounds good.
Okay. Let's take a look. So this here, it's a report, earnings that are expected to be released in the next 2 weeks. We're going to take a look from the options perspective, and I'm going to filter out stocks that on average trade at least 5,000 contracts or more a day. So here we got a couple here after the market close. OPK, that's right now the straddle is pricing in a 16% move in either direction. That compares to historical 4-quarter actual move of 9.8% in a stock and a 12-quarter average realized move of 11.2% in the last 12 quarters. The high move on that, 29.2% in the last 12 quarters. And we could see here that today's implied, at least the implied move as of yesterday's close, we're not open yet today, as of yesterday's close, 16%. And that's above the average of the implied moves of 14.7% in the last 4 quarters and above the average of the implied moves heading into earnings in the last 12 quarters of 12.5%. Starbucks, that's expected today after the market close. Right now, straddle as of yesterday was implying a move of 4.2% in either direction. That compares to a 4-quarter average move of 2.2% and an actual 12-quarter average move of 3.4%. So we see here 2.1% above the 4-quarter average, 0.8% above the 12-quarter average. The high move on that, 9.7% in the last 12 quarters. Is that Carvana, CAR? Let me take a look.
No. Carvana's, that's
Okay.
not Carvana.
Avis. That is, are they in shutdown or they're allowed to operate now?
Well, I think most of the economy is somewhat open. We haven't gone back to shutdown method. But you know, people aren't flying into airports, right? There's no business travel. I would say just by the way, and I can only speak locally where we are in Pennsylvania, people's habits have changed, right? So I would think for the foreseeable future, if you're in the car rental business, it's probably not great.
It's very tough. It's a very tough. How are the cruise ships still staying in business? That's amazing to me because, you know, it can't be cheap to park the.
They're running them aground for scrap. The lower end of the fleets in India.
Yeah, it's got to be, because that's a very capital intensive business, and you know that they're still kind of around, and it's not like their stocks are trading. They're not like in pennies. They're trading like they're going to reopen and start making money. But anyway, Avis, as of yesterday's close, that straddle implying a move of 18.7% in either direction. That compares to last 4-quarter average move of 6.1% and a 12-quarter average realized move of 8.8%. So 12.6% above the 4-quarter average, 9.9% above the 12-quarter average. High move on that, 17.1% in the last 12 quarters. Let's take a look at some of these bigger name ones. That's Shake Shack, right? Let me make sure. Yep, Shake Shack, restaurant business. I think they're open actually, Shake Shack.
Well, they have tried. They have tried to move into the delivery model using Uber Eats, Grubhub. They've tried to reposition themselves, and they're doing a lot of takeout. But a lot of the Shake Shacks are in and around malls, and just the traffic to the malls is
that's not going to be.
Anyone who touches those spaces is in real rough shape. Unless you've already had a big, heavy drive-through business, it's really rough.
And it's already a low-margin business to start out with, right? So Shake Shack, that's as of yesterday's close, that straddles implying a move of 8.4% in either direction. That compares to a 4-quarter average realized move of 13.4% and a 12-quarter average historical realized move of 11%. So we see here that's 5% under that 4-quarter average, 2.6% under the 12-quarter average, and the high move on that 20.6% in the last 12 quarters. What is this one? This might be Carvana. There it is, Carvana. So that's also expected to report today after the market close. We got a lot of them today after market close. Carvana, that's expecting a move of 12.3% in either direction, compared to a 4-quarter average realized move of 13.8% and a 12-quarter average move of 10.9%. So under the 4-quarter average, a little bit over the 12-quarter average. The high move on that, 28.1% in the last 12 quarters. Apple, a big one, that's expecting a move of 5.5% compared to a 4.1% move in the last 4 quarters. Last 12 quarters, 4.5% move on average. So we got 1.4% above that 4-quarter average, 1% above the 12-quarter average. High move on Apple in the last 12 quarters, 10.5%. Facebook, right now, the straddle implying a move of 6.6% in either direction, compared to a 4-quarter average move of 5.4%. So we're about 1.2% above that 4-quarter average. 12-quarter average move is 6.4%. So like right there in line. High move in the last 12 quarters in Facebook, 19% after reporting earnings. Twitter, That's pricing in a 12.1% move in either direction. That compares 4-quarter average move 11.9% and a 12-quarter average move of 12.6%. So really right there, like right in line with the historical averages. The high move is 20.8% in the last 12 quarters. We got Google. That's a big one. Google and Amazon actually as well today. So Google expected to move 4.8% in either direction compared to a 4-quarter average move 4.2% and a 12-quarter average move of 4.6%. So kind of like right in line with those averages. The high move on Google in the last 12 quarters, 10.4%. Amazon, let's do that one real quick. So Amazon, as of yesterday's close, expecting a move of 6% in either direction. That compares to a 4-quarter historical average move of 4.9% and a 12-quarter historical average realized move of 4.8%. High move on that, 13.2% in the last 12 quarters. So that's really quickly some of those big high market cap stocks expecting today. And we got a bunch of them, you know, because I got a couple pages here full of earnings coming up, but those are the big ones. Wanted to highlight them. Will, you have any questions on?
Well, like, is there any, people are asking, are there any ideas in Apple if you were to screen for some earnings ideas going in today? Are there a couple that pop up or in one of the big ones?
All right, well, let's just take a look at the Apple history real quick. So first, let's just take a look at what Apple tended to do around earnings. So this is the charts, how the options, what the options were implying compared to what the stock actually did. So these bars over here, that's what the straddle was implying, up or down. In this one that I'm actually hovering over, we see July 30th after the market closed, the actual move in Apple, it was up 10.5% after reporting earnings. The implied move, according to the straddle, was 3.6%. So we see here way higher, you know, than what the options were implying. Here, just to me here, it looks that most of the time it's up more often than down, you know, so it tends to do pretty well around earnings. Historically, we see that the options overestimated the move 58% of the time. On average, the implied move heading into earnings was 4.6%, and compared to the actual realized move of 4.5%. So that was actually priced really well, right? There's not much difference there. Let's take a look at the implied volatility and what that tended to do. So when we look at a 30-day option, 30-day constant maturity options, we're not looking at the near term. Remember, the near term it's more gamma. You're playing more the move. The longer term, longer dated options, they have more vega in them. So these are people who play calendar spreads, try to arb the move and either get long or short vega. So on average, the implied volatility on that 30-day constant maturity was down 21% day after earnings. The average implied volatility day before earnings was 30.5. The day after, the average implied volatility dropped to 24.1. 5 days later, on average, it was 24.2. So today, we see like the implied volatility is at 50, so way higher above that average. Let's take a look. So here's the average implied volatility 2 days out, 31.8. The high, 50th, so that's where we were yesterday. So we're way on the high range, and yesterday was a big down day as well. So implied volatility was up in general across the board. This is on the high range, low 24.9. So we still have today's trading before the market closes because they're reporting after the market close. So still have one more day of trading here before they report earnings. So that's Apple really quickly. Got any other? Did you have any other ones?
No, that's good.
Okay. Let's take a look. Let's just take a look at Amazon as well.
Just was there a screener you wanted to get to yesterday that we ran out of time at the end?
Yeah, but you know what? I don't think I have enough. I don't think I will have enough time right now to do it. And because we have a bunch of earnings, let's just stick on the earnings.
All right, sounds good.
I think like today is probably our biggest earnings day. You know, with all these tech stocks reporting, Amazon, Facebook, Google. So let's just go over a couple.
There are 359 earnings today.
Yeah, exactly. So let's just and we'll come back to that.
Just so we know, though, on November 5th, they're almost 500. So it is we're in the midst of the biggest part of the earnings season the next week and a half.
Yeah.
Plus we have the election on Monday. Don't forget that.
Is it Monday or Tuesday?
Oh, Tuesday. You're right. Tuesday.
So this is Amazon also reporting today after the market close. The options tended to overestimate that move 58% of the time. On average, the implied move heading into earnings was 4.9% compared to historical realized move on average 4.8%. So not much differential there. Obviously, if you're playing the long terms either direction, the averages, they just wash off, right? And it's not, there's no differential there between the implied and realized. Let's take a look at the implied volatility, similar kind of to Apple, that on average 30-day constant maturity, and implied volatility next day down 20%. The average implied volatility day before 34.5. The average implied volatility day after 27.6. 5 days later, on average, the implied volatility 26.7. So that's Amazon.
We're getting a call from Tita for Twitter. He's asked for Twitter about 3 times with this earnings.
All right, let's take a look at Twitter here. So here's Twitter and how Twitter tended to do compared to the implied moves. So here it looks like historically the options overestimated the move 42% of the time. It's only 42% of the time. The average of the implied moves on average, let me see, they averaged 11.2% compared to a realized move of 12.6%. So here the stock reaction on average was above what the straddles were implying. So it moved more, it broke out. You see here where it's above these bars, that means that the stock moved more than what the straddle was pricing in. So it can definitely move here. And let's take a look at the implied volatility. So the implied volatility on a 30-day constant maturity, on average, the 30-day IV is down 29% day after reporting earnings. Day before earnings, average implied volatility 63.3. Day after, on average, the implied volatility 45. 5 days later, continued to decrease 39.8. And let me take a look at the stock patterns in Twitter.
He's also asking about that alert button in the right under your face on the it says alert option strategies detected.
All right, I'll take a look at that. Let me just go really quickly with the stock patterns just to see what it tended to do after reporting earnings. So here in the last 12 quarters, 67% of the time it was higher, 33% it was lower, for an average gain of 2.6%. From the open to the high, the average move was 5.1%. From the open to the low, average move was 3.8%. From the open to the close, it looks like 50-50. Half the time it was higher, half the time it was lower. For on average, it lost 0.3%. Here we see on at least the opening gap from absolute terms, the average move up or down 10.6%. So that's the price action analysis in Twitter. Here, trading opportunities. This is what tended to work historically in Twitter. So here we see calendar. Oh, sorry, these are the opportunities, credit spreads. So selling the 50 delta call, buying a 25 delta call. Historically, that was the winner 75% of the time for an average gain of 23%. Call spread. So this is a time spread, selling the at the money near, buying out of the money far, day before earnings, waiting 1 week after. That was a winner 70% of the time for an average gain of 18%. Another credit spread. This is an out of the money spread, call spread, selling the 25 delta call, buying the 15 delta call. That historically was a winner 82% of the time for an average gain of 10%. Keep in mind though, like right now, these are popping, so we have a little bit of an indication of what's going on in Pinterest, what's going on in Snap. You got to take other things into consideration that's happening today as well. So even though some things that worked in the past, always take a look at what's different today and take that into consideration. We're up against the bell, Will.
Awesome job, Dima. Hey, everyone. Thanks for joining. Very active chat in YouTube. A lot of people calling for a chat. We do have a chat in the forum. I know it's not perfect, but if you want to use that chat, I just put out a link to it. Thumbs up. Make sure you subscribe if you're not subscribed. Dima, great job today, buddy.
Thanks, everybody. Thanks, Will. Have a great